What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. It's been a little while since I've done a full video on Lofty stuff. I think this one, I mentioned it in a recent video, Jerry's announcement of freezing trading on properties that have been listed for sale in real life. I mentioned I don't like it, but I wanted to get, really weigh in on this, give you some details about why I think it's such a problem. To me, it's sort of the, trying to kill a fly with a sledgehammer type thing. It's a really gross solution to a specific problem, right? We're doing something globally to stop an individual action. And I don't really, I think it's just going to hurt us in the long run. But I also think that he has shared some thoughts that he had, his ideas about how markets work, and some feelings about some market participants that I think maybe are at the root of a lot of the bad decisions that seem to happen at Lofty. And I don't know that that's the case, but it's, there are plenty of times where we see things that I think hurt most of us or hurt a lot of us as investors that are being done to solve a specific problem. So what's happening here? Well, first he talks a little bit about, insider trading not being illegal, but it's problematic. I don't disagree with that, right? I don't think that managers should be able to trade on information before that information is made public. This is one of the things they're saying. Okay, I don't. They want to freeze trading on properties once we vote to list them for sale. And then he talks about, well, I don't want to do it once we have an offer because the manager might know about that offer and then make trades before anybody else knows about it. And yeah, I agree. That's, that shouldn't happen, right? I mean, the easy solution or I think maybe it's not as easy for them to do, but the more direct solution would be, okay, if you're managing a property, you're not allowed to trade in that property within 24 hours of an offer being received, right? And the offer being posted, information about an offer being posted. Like, I don't mind keeping it so that managers who are managing these sales and have information like that, not being able to trade on it before everybody else has that information. I don't see anything wrong with that. But saying, okay, we're going to freeze for the whole period of time when we vote to, from the time it is voted to sold. Why is that such a big problem? Well, let's look at 1388 Penhurst. This was voted to be listed for sale. Let's see, this came back, October of last year, a full year ago, this property, they had the votes to list for sale. I bought most of my shares in this property since it was listed for sale, and then now they decide to restrict trading. Now that it is a fantastic price. So now anybody who owns that is completely stuck, right? They haven't been able to sell it for a year, in large part because how tough it is to sell properties through Lofty, right? We had a number of offers that I think if we had a single point of contact at that point, making decisions that we would have sold it probably 6 months ago. But it took a while for the ecosystem to figure out that we just have to give control to one person. Now that we're doing that, I think that we'll get it sold a little bit quicker. But regardless, the vote to sell is because we don't think there's great liquidity on the platform. That's true. But somebody might want to take advantage of the liquidity that is there and get out. And, to have that money locked up for a year during this process, right? If they had implemented this decision a year ago, before this had happened, would be absolutely absurd. Like, why are we doing that? I can't sell my position, and we're struggling to sell it in real life, in large part because of the setup on here. That seems problematic. And so, he said, well, when you decide to list it for sale, it's saying that you no longer find the secondary market valuable here. Well, that's often true, right? The secondary market isn't, we're not pricing some of these tokens correctly. But that doesn't mean that if the price pops after we vote for it to sell, that we don't want to take advantage of the secondary market, right? It's just at the moment it's doing things poorly. And so he's saying, but this is the one that really got me. He said, okay, this really pissed him off, right? To see someone vote to sell and then sell their tokens. Well, I've done this several times. I don't think there's anything wrong with this. I bought tokens that were $15. I thought the property would sell for 30. The price of the token goes up to 25. Yeah, I voted to sell it because I wanted some liquidity closer to the real world value. Now I have it. Like, the fact that this makes him angry, I think is really problematic, because what happened is we voted to sell it, and that unlocked some value for all the token holders, right? It doesn't, just because somebody gets out. I don't really understand how, I don't understand how you build a marketplace and then you, are mad that there's unequal outcomes, right? Like, you're either just a marketplace, like they claim to be whenever it's convenient, or you want to really affect the outcome for your individual investors, right? But it seems like he's got a little bit of both going on here, right? He's mad that somebody would vote to sell. That unlocks new value, and so then they sell their tokens. When the preference would be, okay, let's just everybody not have that value unlocked. It seems very, it's a really strange position to take for me, right? Like, that this would make him mad, especially. Yes, it is a permanent decision. It's a permanent decision that, now they have no skin in the game. Yeah, because the situation changed, right? If you vote to sell and then you just sell your token, there was never a price pop or anything. Well, that's a little bit weird, but also, that's not something that I would ever do. But maybe somebody's situation changed, right? They voted to sell because they really need that liquidity. The sale process is going slow, so they sell their tokens anyway. Like, that's another option, right? Another situation where that can happen. But the fact that this is giving him feelings is, I think that's really problematic, right? Like, it is, and I think he often talks about, well, we have all these people that aren't power users. They're not in the Discord regularly. And I understand that. But to think that they should have just as good outcomes as people who are working on it regularly, doesn't make a whole lot of sense, right? Like, okay, if we're going to be the NASDAQ for real estate, which we've talked about, I have a whole separate video of why that's ridiculous. But let's just say, okay, that's what we're going to be. Well, there's a lot of people that are making a lot of money trading the NASDAQ, and those are, people staying well-informed, educated, being involved in their investments. And there's tons of people that are losing money just picking random stocks. As a platform, as a marketplace, you have to be, basically agnostic or ambivalent. I'm having a really hard time with word finding at the moment. Sorry about that. This is just part of my brain fog from being sick. But it is, you have to just not care about how that is, that there's winners and losers, because markets are going to have winners and losers. And, one of the things, there is a little bit of a difference here in that, he has two marketplaces that he's trying to protect people on both sides, right? And he's acknowledging this, right? We have two distinct features. You have your base and token stakers in the liquidity pools, and you have, you have the people actually trading the property tokens. And so, this is one thing that I wanted to point out first before I talk about that. He's saying, because traders aren't being rational in trading at the price of the real world value. This is, I think, another really bad assumption he's making. I don't think that the tokens trading at a significant discount to the real world value is necessarily irrational, right? I think it reflects the additional risk that people put on trading on the Lofty platform, because we know someone can just come out with arbitrary rules whenever they feel like it, and impact our ability to realize that real world value. And because it's been proven, we've shown over and over again that it's difficult to achieve that real world value with tokens, with sales. I think it's a perfectly rational position that traders want some sort of discount to the real world value to be buying tokens on here. So I think this is like a really bad assumption that we're having, or that he has. But then saying, like, okay, in the scenario where you've got the USDC stakers, that are betting on, this higher value basically. And once the sale has occurred, then okay, people can come in and risk-free arb away all the profits that the USDC staker should have. Well, it's only risk-free once that property is actually sold in real life, right? It's certainly not risk-free once we listed it for sale. If you look at Odom, we listed it for sale. Initially, people thought it was going to be like $42 a token. I mean, we had some early cash offers that were in the high 38s. It turned out we got like $30 or $31 and change, somewhere around there. So it's certainly not risk-free from the time it's listed for sale. It's also not risk-free from the time that we accept an offer, right? We accepted an offer, and then there was a whole bunch of additional negotiation, and I think we lost like $3 per token. So at any time until it sells, there's no risk-free arbitrage, right? And so this is just a really false premise that he's basing it on, right? If we're going to try to say it's from when you receive an offer or it's from when you list it for sale. Yes, I 100% agree. Once it's sold in real life, yeah, you should freeze the market, right? Once that and maybe I'd be okay with it if it were once we were past all contingencies, right? Because then it's relatively risk-free. Although plenty of deals blow up on closing day, right? So this is just a complete, it's a complete false, narrative that okay, they're doing this risk-free. Once there's unless it's just because, once it's actually sold. And so he's saying, but his reasoning for doing it, wanting to do it sooner than when it's actually sold is okay. Well, you have the PMs and they can front run or whatever. And I think, again, this is the easy solution, right? Make their wallet public, have the DAO members police it. Make sure that if there's an offer received and they traded before that or before it was announced, or maybe not 24 hours, maybe give it 12 hours, whatever it is. I mean, depending, maybe if it's a certain time of day, but you can make rules around this without just nerfing the whole trading system, right? Without really just hamstringing people that are on the site solely for the liquidity, right? I mean, there's very few benefits of investing on Lofty relative to investing in, well, especially like if you compare it to Mogul, right? One of the only benefits Lofty currently has over Mogul is that they have a secondary market. On average, the deals are worse. You're not getting better yields. I mean, but a lot of people, it's important to them to be able to sell, right? There's also some people prefer that they have a little bit of a control. I actually think that is a terrible, except for the people that are really exerting control and have a little group that they're working with. In general, I think it's not a true benefit for most of us. But the thing that that Lofty has right now that a lot of the platforms don't is this constantly open markets, secondary market liquidity. If you're going to just take that away anytime there's a vote to sell, even though, okay, we could have to wait a year before it actually sells. I mean, I don't know what's left. Like, I don't know what, the only real reason left to stay on here is that, well, you just have these extreme discounts, right? And they're only going to get deeper if we continue to have rules that hurt investors. Before I forget, please like and subscribe. In the description of this video, I have links to all the other sites that I currently invest in fractional real estate online. If you use those, do your own due diligence on those platforms and on those properties. Just because I'm investing in them doesn't mean that you should. And also there's a link to the Discord that I have set up where we talk about all the different platforms. So please feel free to click that link, join our group, and talk about like Mogul, which I just mentioned, Lofty, Arrived, all the different platforms out there. But all right, back to this. So what, I get wanting to protect the USDC stakers. But yeah, I think until you actually have a property sold, you're not protecting them from this risk-free scenario from arbitrageurs, which is what he's talking about. Now, do you want to do it a little earlier? Do you want to do it when it's fairly certain, like after inspections and all that? I think maybe that's fine. But at the same time, if we still have a long period of time before closing, again, you're just taking that liquidity away. Like there's been times where I knew we had a property under contract. I sold my tokens and my net was less than what we were going to net on the property, but I had some place to reinvest that money today, and I was willing to give up a little bit. And I think that's a perfectly rational thing. And it's so, one of the things I want to talk a little bit about is like the role of arbitrageurs. I don't even know. This is not a word I ever say out loud. But this is something that, healthy markets are, it's an important role that they play, right? People always talk about the Dodo white paper. This is, the white paper that's about basically how the liquidity pools are structured, although, Lofty openly admits they didn't really follow this exactly, and they couldn't because the tokens aren't fractionalized and whatnot. But one of the things that they actually do is they encourage arbitrage trading, right? Now, this is a little bit different because in their markets, what this is really made for is trading things that are also traded in other markets. And so for Lofty, there aren't other markets for the tokens currently. So the only real arbitrage available, and there's some slight between market and limit orders, or there used to be, that seems like that's going to be disappearing soon. Or maybe it already has, I don't know, where the limit orders and market orders are going to match. But other than that, the only real arbitrage is buying the tokens, and the only other market is selling it in real life. And so we don't actually have this opportunity. And I kind of wonder if this is why why the liquidity pools are so broken, right? Because when you read about this, it sounds like in theory you're always going to have pretty balanced pools on both sides. But if you look at it and you look at the tokens, the balances in on Lofty liquidity pools, I mean, they're always horribly out of balance, right? You always have tons of excess tokens or lack of USDC. And this happens because so in a perfect market, you would have, it happens from mispricing, and you'd have people coming in for the arbitrage opportunity, buying up those tokens, selling them into another market. We don't have that. The way we can fix it is buying those tokens, selling the property in real life. Now we're, as token holders, getting to experience the real world value of those tokens, right? Versus being stuck with something that's at a huge discount. And so, I mean, I think a big part of it is it's working so poorly for the stakers right now, and it is in large part because we don't have this, this is saying, okay, it effectively mitigates impermanent loss for liquidity providers. Well, okay, that's just not true at all in the Lofty pools, right? Like we have, I've had USDC stuck in pools for, upwards of a year, and I've only been on here a little over a year. Like it is, we get stuck with these impermanent losses, and they last for a very long time. So these, the trading, the pools, they don't work at all the way they'd expect to in theory, based on the model that they copied. But it's because the markets are very different, right? And I believe the way to fix it, I think you do need arbitrage opportunities to keep these markets healthy. At the moment, the only way is to move these poorly performing tokens off the platform, right? And it will help USDC stakers, right? Like, I mean, I have the Walsh property. I've had money staked in there, and not a lot, but I've had money staked in here for a very long time. I make no money on fees. I lose 40 or 45% if I unstake right now. So I'm in a terrible spot. Okay, now we're going to sell it in real life. I'd just much prefer, I don't care. I also own tokens. I don't care if we can keep, it is, now I think it's under contract and it's going to sell Monday. So this is at the point where, okay, maybe if we're past all contingencies, you freeze it now, I'd be okay with it. But honestly, there's still risk of it not closing, until right up until the day it closes. And so up until then, I don't mind trading, even if I'm a USDC staker. Once it's sold, yeah, of course, lock the pool then, right? If you, I think this actually all stemmed from a complaint that happened where the property was actually sold. I'm not 100% certain if it was in this message or if it's something he wrote elsewhere. I think it was something he posted elsewhere in the Discord. But yeah, like, of course, once it's sold, it's different. And also, once it's listed for sale, yeah, put a banner up on the website that shows you when you're going to trade it. Hey, this is already listed for sale in real life. That's the other thing they've been doing for a long time. Penhurst hasn't been on the marketplace for the whole year, right? And so, of course, we have this downward pressure on your token prices because nobody can find it to buy it, right? Like, you only have the existing owners, and I've continued to buy, I've bought and sold. I sold when the price popped. I've bought more when it goes down. As I think, you should do in a healthy market, right? You should have people that are doing that. Oh yeah, I wanted to get back to, so this is just a little AI overview of the functions of arbitrageurs. And, what are we doing, right? We're increasing market liquidity, which is important for the markets to work, right? Correcting temporary mispricing. Like, that's the goal, right? Of getting these. This is not a temporary mispricing, right? Penhurst being sold so cheap, now the price is getting more accurate because the property is sat vacant for a year. It's falling into disrepair. So maybe maybe this price is closer to accurate, but trying to get rid of mispricing, adding stability, like it is. If we could see that there is a clear path to a real world sale regularly, right, and it wasn't like every single one that I've been a part of so far where we're actually losing money relative to where it was purchased, and probably getting less than we would have in a typical real world sale without where everything was working perfectly. I do think the new model that many of the DAOs have used, where we're just picking one person to make that sale, has improved it quite a bit. Although I think there's a lot of work we could do on that as well. But I think that's, it's the only way. Otherwise, we have people where we're stuck with tokens that are priced extremely low. Maybe at some point where there's another market out there where, where the trading works a little better. But I think that, I don't think that traders aren't being rational with the low token price. I think it's a reflection of how the platform is currently run, how there's not best practices to actually make deals work the same as that property would work in real life. And I also think that, the hurdles to getting it sold in real life all make it a perfectly rational thing, right? I don't think this is something where this happens all the time in economics, right? Like where they have these economic theories and then they say, oh, well, when we look at it empirically, it's not how it works. Well, that means people are just behaving irrationally, right? Well, most of the time, it's that we don't understand all the incentives and all of the things that people are taking into consideration. And yes, I mean, people are often irrational. But when you have, virtually all of the tokens on a platform, not all, but very close to, like, let's look at state of Lofty. Our average token price today, $30.58. So almost a 48% decline, right? What is that? 39%, right around 39% decline from original list prices. When you have that as your average and you have some, this huge group, it's not, this is a platform problem. It's not a investors in the platform problem. Like if it were, if we had a market of 10 people, right? If you didn't have thousands of Lofty users, maybe you could blame it on the users, right? But it's certainly, there's so much friction in the system that of course it's rational to want to pay less than what you're going to get in a real world sale, because it's going to take a lot of frustration and time to get to that real world value, right? So, I mean, this statement and the being mad about people getting out once the price pops, I mean, those two things are just, it just really reflects on the mentality that is not really one of, okay, we're going to just create a marketplace that functions like a regular trading marketplace that people operate in. I mean, I think those are two, to me, they're just not, I don't know. They don't line up well at all to being this marketplace where, like the NASDAQ or something like that. Yeah. And I mean, so, let's see. I just want to make sure there wasn't any other points. But so yeah, the Dodo paper mentions arbitrage, 58 times between arbitrage and arbitrageur. Now there are some instances where they're like, okay, this can be a problem. But even in the spots where they think it can be a problem, they think they mention, well, it's really a smaller issue than we really think it is. I don't know. I'm not going to go into that whole thing. And then, yeah, I think it's really just a misunderstanding of the role of arbitrageurs, right? I think that, okay, arbing away all the, with no risk is just a completely absurd statement unless the property had already sold in real life. And even then, we might not have risk, but we have some time value of money concerns, right? Because properties sell in real life, and sometimes it takes a long time to get that cash, right? And so it might still make some sense to let people cash out in the meantime. Now, I don't know. Like I said, I'm perfectly fine with two solutions, right? One, completely freezing trading once the property is actually sold in real life. I think that makes perfect sense, right? Then, okay, you've locked in the value to the USDC stakers. The other thing too is you've got, you've got people. You're stopping. So like if you did this on Penhurst, you'd have no trading fees for a year. And then sometimes we list these in real life, and then it turns out, okay, we didn't get what we thought, and we take it back off the market. Or like properties like Eileen. Eileen has been on the market for a long time, but it's basically like, okay, we wish we could get this price, but in the meantime, we're collecting a decent yield, and who cares, right, if we don't. And so for that one to stop trading is absurd as well, right? So I think that, like I said, I mean, this is like using the sledgehammer to kill a fly. Like it's like maybe you hit it once in a while, but you're just going to cause more damage than the good that you're achieving. And so yeah, one, freeze trading after you sell the property. I think that makes perfect sense. Two, create some rules around, okay, if you have insider information, if you're the property manager, if you're the one negotiating the sale, yeah, you don't get to trade until that information is public for a certain period of time. I think that's a somewhat easy solution. Now, one of the things you could say is, well, okay, the offer is public, but now we know, they already have some information about, some other information coming up, like, we're trying to renegotiate or something. Like, you're never going to eliminate that completely, but if you want to, you can just say, okay, whoever's the property manager doesn't get to trade, right? Like, you're locked in. Whatever you've owned up until the point of it getting listed for sale, that's what you're going to own. And then, so that might be a detriment to the property managers, and then they have to decide, okay, well, do I want some additional compensation for being in this position? And that's something that we'll have to figure out. But to just be like, okay, we're just going to freeze the whole thing, nobody can trade from the point that it's listed for sale, despite the fact that we might be listing it at wish pricing that we're never going to get, that some people might just want to get out earlier. And they're willing to give up a little profit for liquidity. Like I said, I've done that. I've sold out before because I judge the time value of money for myself, and I think, okay, I'm gonna make more by turning that money over again versus versus letting it ride all the way through the sale process. But we've already unlocked that value for the rest of the token holders by getting it to that point. I don't see, I don't know, both of these things, if you were trying to, if we were really trying to protect investors across the platform, in a way that other marketplaces don't, then I could see maybe wanting to also do this, right? Because maybe we're having a little bit more of a nanny state type of environment but if you think about like the complete lack of protections, there's so many times that things have gone horribly awry for investors on here, And the answer has been, well, you really should have done more due diligence. Um, I mean, we get that answer all the time. We're like, in some instances, it's true, right? There's definitely like, yeah, I didn't, I don't think anybody should have bought brownfield at $50. Like that to me seemed like a relatively obvious decision to make at the time that I originally looked at it. Now, it doesn't mean that we got all the info that we should have, and that if you did any reasonable due diligence, that you would have uncovered all the problems that existed. But we're not getting, we're not being protected from those sorts of things left and right? We're being told, oh, well, you should have asked more questions. You could have done this or that. But somehow on the trading side, somebody goes and makes a trade after the property was sold in real life without checking what's the current status of the property. And then we're going to protect those people, who, yeah, they should have done more due diligence. Although at the same time, Lofty certainly should have put something on the platform saying, hey, this property is sold in real life, right? I agree. You shouldn't have to look in the Discord ever to find out something about the property, right? It should be a place where we discuss and make plans, but any actual facts about the property should be on the listing pages. It's not currently the case. We can't pretend like we're acting in the, I think that's a much better protection than freezing trading, right? Like it is the trade-off there. The number of people that you're hurting compared to who you're protecting is much different by putting some warnings on the site, putting some information on the site, and then letting people act as adults and decide, like, does this make sense for me or not, right? And yeah, again, like I said, stopping true insider trading where somebody has info that they haven't shared with the rest of the group yet and is trading based on that. Yeah, of course I think that's problematic, but let's just address that problem, right? Let's not just stop the whole thing. I mean, and if we were consistently getting properties sold in a quick, in a very short period of time, I think that, the argument might look a little bit different. But it's just not, it hasn't been the way that this world has worked at all. And so I don't know. I think it's bad for the platform. It's certainly bad for everybody who I've talked to that is investing on here. I actually haven't talked to a single person that's been like, yeah, that's the way to go. And I know that's sort of the argument, right? That it's the people that aren't on Discord or aren't available regularly. I just don't know that you want to be catering to the fringe, to the people who, I don't think it's a platform that does well for anybody who's not paying attention on a regular basis. And so why we're hurting your, power users in order to, help people in that. I mean, I think that there's a lot of decisions sort of in that direction that just don't make a ton. Anyway, I think that I've rambled about this enough. I think I just, I've made all the points that I wanted to, obviously. So to wrap it up, yes, I agree. Insider trading is a problem, right? Let's not let PMs trade when they have information that they haven't put out. One thing that you could do is restrict their trading to, okay, it's only, the day after Lofty Day they can buy or sell, right? We don't, and again, like if we're going to put them in a worse position, because there's lots of things other than just a sale that it can affect the value of the tokens quite a bit. So why we're particularly worried about that, I'm not sure. But anyway, I think that makes perfect sense to maybe create some additional rules around when people with inside information can trade. And yeah, I think once there is zero risk, right? Once there's actually a zero R opportunity, yeah, maybe then locking it so that, to protect the USDC stakers. I think that makes some sense as well. The other thing though too is, and I think that they know this already, but fixing the pools, right? Like maybe this Dodo pool setup didn't make a ton of sense the way they've implemented it, right? Like, obviously, let's go back to, obviously it's not working the way that it's intended, right? Because we do have all these pools with excess token balances all the time, where, they expected, when you really read how this is supposed to work, that those would get sucked up pretty quickly in a way that they're just not on this platform, right? And so I don't know, maybe I feel like we're we're making things worse to try to fix problems. Yeah, like this is one of those situations where the cure is worse than the disease or whatever it is. I don't know. And I mean, like I said, I have money stuck in pools. I'm not a huge staker. I have actually made a little bit of money on the last few that I've done because I've kind of figured it out a little bit, I think. But in general, I think that, you know, like I said, I mean, I just think it's like an overreaction, and it's too broad of a change to fix the very specific issues, if these are the issues that they're concerned about. Now, you know, the other thing is too, I think Lofty probably doesn't like that all these properties are being sold off their platform, right? I mean, I think that could be part of the motivation. You know, this is certainly going to make people a little more hesitant to vote for a sale if they know, okay, once they vote for it, okay, now I'm really stuck in this until we get a real world sale. Like that's, I don't know. I don't know if that's part of the motivation or not, but it's certainly going to put a damper on people's decisions to sell things as well, right? And so obviously that benefits Lofty to have more tokens on there for longer that they're making money on. But I think it again at the cost of token holders. So anyway, that's it for me for today. I'm super curious what other people think about this. Please put your comments, you know, below in this video or in the Discord. We can have a discussion about it. We've already talked about it a little bit. I know that most of the regulars in there are not happy with this plan. Do you have other criticisms or other solutions? Any of that, I'd love to hear it. Anyway, you can tell I'm still just not doing that well. Oh, so, and sorry about that. I'm going to get back on track soon, though. Until next time, I'm going to keep making mistakes so that you don't have to.